Hello everyone. Had time for another video, so I thought I'd throw one out there for you. Let's take a look at this past 10 days of the ES and point out something to you that you already know. Here's a low before a big reversal, 6:30 in the morning. Here's another low before a big reversal, 6:40 in the morning. Gonna meander over here. Here's a low before a big reversal, 5:40 in the morning. Of course, today, here's a really big low before a big reversal, 7:10 in the morning. So this is getting a little old, whereby there's some legitimate reason for the market to sell off, and it does, and then everybody starts buying again. So I know a lot of folks are saying, oh, well, then the thing to do is to use that to your advantage. Buy up everything in sight, half an hour into the open, and you'll do great. And that's been true so far, and it may be true for a while longer. But let me say something that no rational person could disagree with. This phenomena will stop at some point. I mean, I don't know why this is going like this, but this will end. And the thing is that the longer this goes on, the more people will take it as a given that the thing to do is just to buy during that early morning weakness. And when that phenomena does end, and it will end, then they're going to be puzzled and pressing sell buttons. So anyway, that's the situation we're at now, but who knows how much longer it'll go. The good news for the bears is that for at least a little while, a little bit of recent history here, we have got a bit of a drop, moving from 1330 down to 1296. That's how pathetic things have gotten. That we have to look at a minuscule, what is that, a 2% move, if that, as a way of saying, well, things aren't so bad. But that's the biggest good news we've got in a while, that move. But as has always been the case recently, we got this reversal rally, about 15-point reversal. For me, the more encouraging news is, of course, the euro. I came into the short, and I decided rather close to this line to cover because it wasn't really poking past that double bottom. We seem to be firming up, and it also wasn't such a gigantic position that it was like some Herculean task to figure out what to do. I think that it's terrific that this thing continues to kind of shape up in the general direction that I want to see. In other words, we had this very large rally, massive really, from Jan 13 all the way up till really yesterday. I mean, we actually moved a few pips higher yesterday, strangely enough, before we started sinking again. And tomorrow, I did my chicken scratch today on the GDX. Tomorrow I will release to the world my chicken scratch on Euro, but you kind of know what it's going to be, which is going to be these three peaks. And my supposition that we will break the lows that we set today and move to indeed break the lows of January and move down to, I don't know. Let's, just for giggles, let's resize the graph. I haven't even bothered trying this yet. Okay, well, I've foolishly tossed about the notion of reaching parity. Even I don't think it'll get that low. But in the most perfect execution of this fall, I guess we could get south of 1.15 or close to that. So that's a fairly ambitious target as it is. But I suppose that's within the realm of reason. I hereby retract my parity idea. I think that's just too much. I don't think that's plausible. But I do think getting down to 115 or so is plausible. If we blasted past this green trend line, that would damage the case pretty badly. Although, as I've pointed out, those sorts of temporary blasts aren't necessarily fatal, but it would not be good. Well, let's take a fresh look at that ES again, and let's unresize the graph because that's a bit extreme. So the thing here is that this is a lot of earnings this week, but frankly, all the kind of interesting earnings are done. all the ones I like to watch anyway. It's sort of like we're past it. What we need to see from a chart perspective is, definitely a break of that low at 1296. I've drawn a shorter term trend line here, this blue guy. So, if the market is allowed to get a little softer, basically 3 levels need to be penetrated. Level 1, which is not too crazy to think it could happen, is this blue line. Level 2, which is quite important, is this at 1283. And then level 3, if we just want to fantasize like crazy here, is this red line, which would require a break of, I don't know, about 1267 to put into place. But the bottom line is that if softness in equities is going to take place, this pattern needs to not fulfill its destiny. It needs to roll over. I would also point out XBD, the broker-dealer index, as a pretty interesting item to watch in terms of this up or down decision. So on the bullish side of things, this is a pretty nice basing pattern, and provided it stays above, I'd say above 90.42, this is still positioned to at least get back up to the 101 or so type area. If it fails this line, that I think would allow for more equity weakness. So this is a pretty nice base, but that's the broker-dealer index is pretty key to watch in terms of market strength. I'll point out by way of example that if you look at things like Bank of America, which are the kind of trashy stocks in the world of finance that rallied so mightily in the month prior, this is no small move. We went from under 5 to 750. That is a move of over 50% on this piece of dog crap. So, that's a lot for the market to swallow. And if the market, digests that kind of gain and says, yep, it's really worth that much, and it's worth even more, and pushes above 751, that I think would lay the groundwork for continued strength. Although, if you look at interest rates, they're not exactly screaming that the economy is about to set itself on fire. I mean, I remember back, even during, let's just go back to 08, when interest rates were doing this, everyone was screaming the end of the world and deflation's coming, et cetera, et cetera. Well, we're in a level that dwarfs, in a manner of speaking, if you flip it upside down, you can see how much lower interest rates are. This kind of move was shocking people back then, but look where we're at right now. The weaker and weaker interest rates really don't belie growth and asset inflation, and the bond market is definitely signaling that. If you look at ZB, still kind of directionless. I mean, it's been in this trading range since, believe it or not, September. I mean, yes, we had this little drop here, but by and large, we've been between 140 and 146 since the school year began. And it's just been churning and churning. But it's rallied over the past 5 days or so. And, God help the bulls if it burst above that former high. That would just scream that bond strength is just going to amplify and equities are very vulnerable. Now, as far as the wonderful world of precious metals, I only have one short oriented toward that, which is GLD. It is a small short. I'm not thumping my chest about now's the time, but it, maybe. I've got a tight stop on this. I've got a stop at GLD just above this 169 level. We still could see a lift up to this 170-171 kind of range, but I've put on a small position on GLD, GDX. I did a day trade or two on, but I don't know. Listen, after the past several months, I'm a little gun shy in general. This is still, if we take a step back and just speak objectively, this is still shaping up just great as a potential harbinger of things to come. Because, look, it's down over a full % today in the face of a market which had recovered most of its lows, most of its weakness. So still think GDX is really terrific. And just to close, the one that got away, HDY. Early this morning, I wanted to short this thing so badly, and my broker, which almost never happens, said they don't have any. What a shame, because this is the kind of chart that I love. We had a amazing bullish breakout, which failed in a really grand and sustained way, and then we started to fall and then recover from that back up to this, I consider, rather critical line. And so I wanted to short this today and didn't, and then it just started to fall to pieces. So it's, you know, it's a $3 stock or $2.60 stock. This is very risky right here, but it's a nice example of how a failed bullish pattern can really turn on its head and go handsomely the other direction. So that's it from me. Not a lot of certitude here about what's next. You know, one more day this month and then on to February. But this is the last big week for earnings. As I said, nothing really exciting in that respect. Friday, of course, is the jobs report, so that's always something to watch. But listen, we survived another day, and we'll see what Tuesday brings us. Bye.